Hi everyone, I am Prateek, a final year student from Shahid Sukhdev College of Business Studies, University of Delhi. I am making this video under the guidance of Dr. Narendra Kumar Nigam, a financial derivative professor at SSCBS. In this video, I am going to answer some really important questions pertaining to home loans and also expose how banks take advantage of their customers. For your benefit, this video is divided into 4 different sections. First, should you take a home loan? Second, from where should you take a home loan? Third, how much home loan should you take? And the last part covers how banks take advantage of your unawareness. Before jumping on to the main topic, let's first understand what exactly a home loan is. A home loan is essentially a secured loan that is obtained to purchase a property by offering it as a collateral. In the market, there are different types of home loan available, differentiated on the basis of their purposes. For example, if you want to construct a house, then you would need a home construction loan. Or if you want to extend an already constructed house, then you would need a home extension loan. Similarly, there are different other types of home loans which are also available in the market. So broadly speaking, these are the most common types of home loans available in the market. Now, let's move on to the first section of this video. Should you take a home loan or not? If you are someone who does not have enough cash in hand to purchase a house, then you have no other choice but to go ahead with taking a home loan. On the other hand, if you can finance your house fully or partially with your own money, only then the choice of taking a home loan arises. But the question is, how will you decide whether to take the home loan or not? The answer to this question lies in the rate of interest of the home loan and the return on investment prevalent in the market. Speaking historically, you can earn roughly 12% return while taking some risk. Assuming that you lie in the 30% income bracket, the after-tax return on investment would become 8.4%. In the current scenario, the rate of interest on home loans for SBI home loans is also 8.4%. So in this case, you are earning nothing extra, so it's better to finance your property on your own. But we should not forget that this is a year of high interest rates. If we go back to the year 2020, interest on SBI loans was somewhere near just 7.5%. So even if we earn an 8.4% post-tax return on investment, we would still be left with an extra return of 0.9%. So all in all, my point is, if you cannot earn anything extra, don't be in a hurry to take a home loan and invest your own money instead. Now, let's move on to the second section of this video. From where should you take a home loan? In India, the most prominent financial institutions offering home loans are banks and NBFCs. But how to choose one out of them? If you are a government employee or have a steady source of income, then it makes absolutely no sense not to take a loan from the bank. It is simply because banks offer a loan at a lower rate of interest. As far as benefits for permanent government employees concerned, banks such as PNB, SBI, etc. offer loans to them at interest rates lower than what they offer to the general public. Now, let's say you are someone who does not have a steady stream of income. Then it might be a bit difficult to get a home loan from the banks. Or even if you get a loan, it would be charged at a higher rate of interest. The next best option that comes to your mind is NBFCs. For NBFCs, even a low CIBIL score or an unsteady stream of income is never a problem. Even the document checks are lesser as compared to the banks. So it is much easier to get a loan from the NBFCs. Essentially, all it depends is on where you lie in the current situation. For a regular salaried person, taking a home loan from a bank would be preferred, otherwise NBFCs. Now, let's move on to the third section of this video. How much loan should you take? The quantum of loan depends on one fundamental factor. If you do not have sufficient money to finance your property, then you have no choice but to take the home loan in entirety. Second, if you have an option to take a lesser amount of loan and finance the rest of it on your own, then you can start thinking on the lines of tax deduction. For the interest portion of the EMI, you could get a maximum of 2 lakh rupees deduction, and for the principal portion, a maximum of 1.5 lakh rupees deduction is applicable. So let's say you took an SBI home loan of rupees 35 lakhs for a period of 6 years and at an interest rate of 8.4%. The total interest that you would be paying is roughly 9.6 lakhs in all these 6 years. Taking the average value, it comes out to be 1.6 lakh rupees, which is less than 2 lakh rupees. How does it make a difference whether this amount is 1 lakh, 2 lakhs, 3 lakhs or any other value for that matter? It makes a difference because if the average interest amount is less than rupees 2 lakhs a year, then the total deduction that we could have claimed in these 6 years would be lower. The same is the case when the average interest amount will be much higher than rupees 2 lakhs threshold. Continuing with the above example, the total amount of deduction that a person could claim on the interest amount in all these 6 years comes out to be 8.5 lakh rupees. But let's say the same person takes a loan of rupees 44 lakhs for 6 years and at an interest rate of 8.4% this time, then the average interest amount per year becomes nearly 2 lakh rupees instead of 1.6 lakh rupees. In this case, the total deduction the person could claim is 9.3 lakh rupees in all these 6 years. We can clearly see the difference in the deduction amounts that we could claim. We can also claim deduction in the principal amount, but we'll see that in the later part of the video. Now, let's move on to the next part of this video. How banks take advantage of your unawareness. If you have taken a home loan earlier, you would relate to this, that when you take a home loan, the bank doesn't tell you about every charge. These are called hidden charges. Although these charges are very small in amount, when they combine, it translates into a big amount of money. So, as a borrower, you should be aware of these charges as presented on the screen. The two most common of these charges are the processing fees and the login fee. First, the processing fee. Processing fee is a percentage of the home loan amount. Processing fees for banks lies between 0.5 to 1% of the home loan amount. Login fee. Now, this is a non-refundable amount charged by certain banks when you apply for a loan, even before your loan is approved. Similarly, there are several other hidden fees being charged by the bank, such as prepayment charge, late payment fee, conversion charge, repayment mode swap charge, and insurance premiums. Apart from these hidden charges, banks also don't tell you about the prepayment options because prepayment option reduces the interest obligation of a borrower, hence a reduction in the income of the banks. Another mistake people often commit is they tend to pay loan processing fees to every other bank they're applying at. If you get a loan processed from one bank, you can leverage your position as a borrower to influence other banks to not to charge the processing fees. Next, one of the biggest benefits that the banks tell borrowers is that they could get huge tax deductions on the EMI amount. But most of us are unaware of what deductions we definitely get and the ones that we may or may not get. Starting with deduction that we'll definitely get is Section 24 of Income Tax Act. It gives a deduction of maximum rupees 2 lakhs only on the interest portion of the EMI. Then there are deductions that we may or may not get. First, Section 80C of Income Tax Act. Although we can claim deduction of max 1.5 lakhs on the principal portion of the EMI, but for most of the taxpayers, they would have already taken the full benefit of this deduction. Similarly, under Section 80EEA, you could claim up to rupees 1.5 lakhs again on the interest portion of the EMI, provided that the loan is taken before 31st March 2022. Hence, you should be very cautious of what benefits you would actually receive and what you won't, to safeguard yourself from getting fooled by the banks offering home loan. With this, I have tried to cover all the relevant points that we need to take care while taking a home loan. I hope this video will help you in the long run. Thank you.